Hi everyone, today let's talk about small caps. We've been talking about small caps, but I like them. Let's talk about them again. And then of course we'll get into all the long-term charts and data and see what could happen after the massive sell on Friday. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So small caps, why are they in play? We've been talking about it for a while, at least multiple times on small caps. They are interest rate sensitive, more so than you would think really. They are affected really quickly, and once you start to see those cuts, small cap returns tend to outperform. That's what they're looking at here. First 12 months for small caps, 26.6%, and it's been pretty good so far, not quite as good as that. But unlike large caps, which have large diversified global revenue streams, these small caps typically have a lot of floating rate debt, which is heavily impacted by those borrowing rates. They're also heavily reliant on domestic demand. So as interest rates come in, they pay a little bit less for their debt. The US consumer might be buying a little bit more. And right now, the Fed looks poised to make at least one more cut before the end of the year. And as those cuts come in, small caps should be in good shape. Of course, everything is now impacted by this China threat and the tariff threat. What's going to happen with all of that geopolitics that we saw on the Friday session? But once we get a base in here, look for the small caps, look for the Russell 2000. They typically outperform once we get all of the tariff stuff settled and we start to get those interest rates coming in here. And you can see that here, Russell was the best performer post-tariff pause. Didn't outperform year to date, but this is what you're looking for, right? You want to get into those stocks that are more heavily impacted by the risks. And then once those risks kind of come off, we get the tariff pause, then small caps come back on a tear. So that's what we're looking for. You still want to look for stocks that have a little bit better earnings and things of that nature. So you still want to see if you can find the best of the small caps, or you can just buy everything. But you can see here also small caps on a relative basis to large caps. Forward PE, it's one of the lowest in history. They're just not being bought up. You can see long-term average right in here. They're just super cheap relative to those large cap peers. So again, just not in it. People are not buying this stuff. It's an unloved sector, which usually means there is opportunity for the medium to long term. Moving over to fear and greed, we stepped down to a 29 from a 53, big down week. Of course, all of that coming on the Friday session, big sell there, almost to extreme fear. You only have a couple more points. Extreme fear starts at 25. I suspect we'll hit that pretty quickly on the Monday, Tuesday time frame. And then looking at strength, of course, down to neutral. Breadth cratering, we talked about it on the Friday. We'll look at it again later. Put call ratio also elevating. Look how low this is, even with the move down. Want to see this push into that kind of 0.8 to 0.9 area before we see this kind of flip. That's what I'm looking for. Volatility spiked to around a 21. Extreme fear on that. I suspect it'll have some more follow through, maybe a little bit choppy early. We'll see. Safe haven demand, still extreme fear with that big sell on Friday, of course, and then junk bond demand. This was already in fear. It was signaling some risk in markets, but now it spiked up a little bit more. I suspect this will probably go back to the kind of 0.6 area. Moving over to the sentiment survey, you can see, of course, this is not going to factor in the move on Friday, but massive bull side. Makes sense why we saw such an aggressive fall. You can see the bulls were pretty much at peak levels, just short of that 49 record high. That's pretty much as high as it goes, is about 50% bulls. And then once that market started to crash, these bulls were trying to hang in there, and then we saw this start to swing. I'm sure it'll be much lower next week, but this is what it was. Makes sense why we saw that sell. Moving over to seasonality. Remember, this is a bullish seasonal period. Of course, that's likely not to happen now that we've seen a fundamental change in the dynamic of the market with that news around China and the potential for that China deal falling through and the aggressive nature of all of that stuff we talked about on Friday. But supposed to be seasonally bullish, probably not going to happen. Remember, for markets, bond market's going to be closed on Monday. Equity markets will probably be relatively low volume. This is the options expiration week, up 14 of the last 17. Again, I don't really expect that to happen. When we get fundamental moves, that is when we see markets do what they're going to do, not really depending on technicals, not really depending on anything else that we could get in terms of data. It's going to be moving on the fundamentals, pricing in that change that we saw with the China deal. Moving over to the economic calendar, pretty much nothing for Monday. Fed Powell speaking on Tuesday. We'll see if that happens. Didn't really see anything from his last discussions. And then we start to get a little bit of inflation data. I wonder if this inflation data will come through with the government shutdown. Of course, we've been waiting on all of that unemployment data. We haven't gotten any of that, but it is supposed to be CPI this week. On Wednesday, expectations is for this to not move around very much. And there's no posted expectations for the year-over-year numbers quite yet, so that'll be interesting. And then for Thursday, initial jobless claims, continuing jobless claims, we haven't seen any of that data yet. Retail sales also supposed to come out on Thursday. Want to see that do well. You can see the previous numbers were okay. Next number supposed to be a little bit of a step down. We're also supposed to get PPI here. Previous number was good. Expectation here a little bit less good. Atlanta Fed GDP to close out the Thursday, and then for Friday, just going to keep posting these unemployment numbers. We'll see if we get those numbers. I suspect that we probably won't. From what I read, it looks like the government shutdown will take at least this week, and then we'll see what happens after that. Moving over to Max Pain, you can see here total options 3.3 million, relatively low, honestly. What I expected to see a little bit more, especially with the move that we got in there. Maybe that got chopped around a little bit. I'm sure this will go a little higher into the 4 million area for this week, but you can see Max Pain all the way up at 660. So first time we've been below Max Pain in a while. Highest call strike 680. Don't expect to get anywhere near there. Highest put strike 480. Don't expect to get anywhere near there. Put call ratio very, very high at a 5.82. You can see a put wall there at 630. Don't believe we're going to get anywhere near that either. Although it's not impossible. We fell a lot on the Friday. I don't think we're going to continue to fall quite like that, but I do suspect that we'll go lower. 630 should be the floor for the week though. In terms of big option strikes, you can see those bigger numbers out here, 455, 480, not expecting to get anywhere near that. Bottom of the calls is kind of in there though, around 640. I suspect we'll probably fall a little bit more, but there are a ton of puts in the market, so maybe we do find a little bit of strength, get a little bit of a rebound. I don't really believe that's going to happen, but there are some puts in here that suggest maybe that does happen, at least a little bit. Moving over to the charts, I just wanted to highlight that there was a little bit of a bounce here right at the end of the after-hour session to pretty much unchanged from the closing price. There was just a little bit something. Again, I'm not putting a lot of weight in that, but just understand that it did happen. And then looking at those longer-term charts, starting with the weekly chart, of course, it was down 2.43%. Closed all of that week, engulfed the previous 3 weeks down to that 9 EMA, 557. Was the support. We're at 552. You got VWAP there at 648. I do suspect we'll come into that zone at least, and then if that goes, then that next zone in here is about 3.25% down, right into that 21 EMA area around 63.19. Momentum, of course, stepping to bearish, RSI stepping to bearish. We've been watching this for a while. It's been fading on the momentum. We hit overbought conditions the previous week. Talked about how that was concerning and how extended we were, but markets continued to hold up really, really well until we got that catalyst, and then that was terrible, right? So now we got the big sell. We'll see if that can continue to go to the downside or not. Structurally, of course, this is still very much bullish. It's been quite bullish for a while here, but last time we got a candle like this, it was kind of the start of this choppy action, right? You got a big sell here on the 16th, a little bit of choppy action, big sell, a little bit more choppy action, ultimately ending in a very large sell. So is this the start of something like this here? I do suspect that it is. It's been a long run since April. It's been a long rally, and it continues to look like a topping pattern, in my opinion. We've been saying that for a while now, but continues to look like it. And then looking at those levels, 55 EMA on the daily chart, 648 in that kind of same area, and then my next level, 635. Do suspect we're going to go there at least. That's about 0.75%, and then that next area about 2 3/4 to that next zone. It could do that really, really quickly. I suspect we'll probably have some kind of a bounce after we hit the 55, but I do believe we're going to go lower, at least for now. Moving over to the Tasty charts here, you can see we were at that upper ATR band for 3 weeks. We said that was not a great place to be buying for the long term. And sure enough, we got the big sell off of that level down to the 8 and then sold through that area. Trailing stop now is at 625.26, right in here, just below that 21-week moving average. You can see the volume in here. Volume on the week was a little bit higher, and then it sold on that volume, so that's not a great indicator. And then, of course, talked about it on the Friday session, bearish conditions on the daily chart, first time in a little while, huge volume on the sell, of course. Lowest ATR band right now is in that kind of 647 area. I do suspect we will get there quite quickly on the Monday session. Also have that 55 EMA, just like we talked about on the trading view charts, right in there around 649.50. Suspect we're going to get at least a touch of that before we get any kind of reversal. If we don't just gap through it on the futures open, we'll see. But either way, suspecting that this is going to go lower, and we have confirmed bearish conditions. Moving over to the weekly chart for the NASDAQ, 2.27% to the downside. 9 EMA didn't quite get touched at 24,056 in there. The next trend line here around 23,995, 24,000 or so. Momentum didn't flip to bearish, but RSI broke back below the SMA after hitting overbought conditions. Everything says we are due for a pretty substantial pullback. You see the last one, of course, was the last tariff news, the last kind of trade war news. If we get anything like that, be prepared for this to come down all the way to the 21,000 area. I don't think that's necessarily going to happen, but that could be about 13 to 14% lower. It's not completely out of the realm of possibility. And you can see that would take us back to this consolidation from January, February timeframe before we did have that bigger sell. I think that would be a pretty interesting buying opportunity as well in that same area. Zooming out just a little bit, just to kind of give some perspective. Of course, it's not a big sell. We're right at the very top of markets, down just 2% off of all-time highs, so it's not crazy by any means. But the bigger implication is that, is this a tipping point where we start to see markets sell off more aggressively from there? And I do believe that it is. It's been such a long run here since April, mid-April timeframe. If you just do the percentages on that, it's been a run of about 50% with very, very little pullbacks. It seems like it's time for a little bit bigger pullback in my opinion. And then looking at that daily chart here on the Qs, you can see the big down move Friday, 3.5% or so, cut through all of this structure here, 55 EMA in there at 581.56 as your next zone of support. You can see there's not a ton of volume through here, should flow quickly into this area here. And then potentially if that cuts, your next level, 571, kind of in the middle of this trading range. If you get to this 55, that takes you right to the peak from middle of August, which seems like a perfect spot. Then we'll see what happens after that. Moving over to the Tasty charts for the weekly chart here. Again, we were right on that upper ATR band for 4 weeks. We pulled back off of that level, 9 EMA at 586.92, fully engulfed candle. We did see something like this back here in July. Didn't end up resulting in anything, ended up resulting in big rallies. But again, that didn't have the fundamental change that we saw on the Friday session. I do think there will be more follow through on this. You can see the huge volume coming through, flipping that volume weighted MACD. Everything looks a little bit bearish there. I do think we will go a little bit more bearish, and then you can see bearish conditions as you would suspect, pushing towards that lowest ATR band. I think that's going to get touched this week around 581.60, giving you about 1.5% of potential downside this week. Got the 55 in there as well. And then that next zone would be 568. I don't think we're going to get there, but that's something to watch potentially. Maybe we get a tag of it and then bounce back into this area, but it's not impossible. Moving over to the Russell, we talked about how this was right at the trend line, hit that for a couple of weeks, pretty much the same as that upper ATR band, hit that zone and then sold just above this previous high, just barely. Momentum stepping back towards bearish. RSI was overbought. Everything was set up for a sell, and sure enough, it did end up coming down to that 9 EMA just below it, 237.79, and then that 9 EMA was 237.91, so pretty much right at it. VWAP is your next zone, 232.28, right in here for that next one. And then 21 EMA is the next one, 224.81, right in this next zone of volume. I suspect we'll cut through here and probably go back to there before we see anything crazy. Back to the upside, that's what I'm looking for. You can just see it on the volume profile. That's what makes the most sense. Cut through this area last time. Suspect we'll cut through there into this area next. And you can see it on the daily chart, pretty much the same as everything else. 55 EMA is your next support, 233.82. And then that next trend support in here around 231.08. But like I said, no volume through here, very, very little. Your next zone would be this 224 area in here, in this last consolidation before this most recent run. You can see a lot of volume happening here. Turns out that was probably profit taking, and now we're going to return back to this 224 area. Moving over to the Tasty charts, again, very, very similar thesis, hitting that upper ATR band. We've been talking about it for the last couple weeks. Sold off of that level down to the 8 EMA, almost to the penny. Suspect the 21 EMA will be that next zone of support in here around 227, kind of the same as what we were seeing. Momentum step to bearish, a little bit of volume there, same as everything else. And then looking at the daily chart, same as well. Although it is worth mentioning, the Russell did not flip to bearish conditions on the daily chart. Still a ton of volume, 2.8 volume, big sell there. The trailing stop is at 236.56. We did not see a flip there. So it is still technically bullish, but I just don't really see that holding very well. We'll see how it goes, but lowest ATR band for the daily chart is going to be 231.36. I suspect we'll go into that range at some point over the next week. Moving over to the equal weights, this was a pretty interesting one. We had that big all-time high close, all-time high wicks last week. We said maybe this was signaling some bullishness to continue. We saw some of the breadth widening on that previous candle. And then, of course, all of that got crushed this week, down 3.2%. Next level, 184.84, just barely off of that level 21 EMA there as well, 184.14. 55 EMA is the next zone in here around 180. Again, same thesis as everything else. Momentum stepping down, RSI stepping down, big volume. Everything says this should go into that next area at some point, kind of in that 180 area. Then moving over to the ratios here, you can see SPY Russell. SPY did outperform here a little bit. This did continue to go higher in this kind of consolidation range here. The momentum was kind of signaling that might happen. RSI is kind of signaling that might happen. Ultimately, I still think this is going to continue to go lower. But for now, just catching a little bit of a base off that 55 EMA. And then looking at the NASDAQ SPY, these fell in tandem here. You can see basically no change on the ratio, means they fell at about the same rate. So continuing to sell there. It did look like the NASDAQ held up just a little bit better on a relative basis. The percentage was higher, but it also held above some of those EMAs a little bit better. But either way, fell completely flat on the metric. Momentum probably going to step to bearish here, probably a peak level, kind of the same as what we saw on the equal weights. Relative high here, and this looks like it's probably going to be a fake out and that we'll see some more sells from this area. Moving over to the SPX divided by M2, you can see we did get reversal legs at that 30.14 level, right? We broke above it, closed above it. We were looking for maybe a continuation. Didn't quite hit overbought conditions. Thought maybe at the wick we did, but you can't confirm that necessarily. And then looking at the week last week, of course, it was down big, 2.4% below the 8 EMA, 21 EMA, closer to that 2850 area. And that would also take you very close to the peak levels back here from February. Of course, this is a ratio, so it does play out a little bit differently on the levels. Suspect this will come into here. Does that mean the same thing for price action? Typically not, but based on these levels, should be looking for a test of that 21 EMA and my 2850 level, which was that previous peak. Moving over to the Mag 7, we talked about this. The Mag 7 was signaling that this was going to continue to sell towards that 9 EMA, and sure enough, it did at 359.99. VWAP in there, 354.16. Suspect this is going to continue to sell. Does it come all the way back to this zone here between 337 and kind of 341? That was the previous peak. Again, kind of seems like that it will. You can see we already had kind of a breakout retest continuation, but this has since faded after hitting overbought conditions once again. Momentum continues to fade. RSI breaking below the SMA. I do suspect there will be more continuation there, at least into this zone. Trend support would be down here around the kind of 323 area. Let's go ahead and extend that out, which should give you a target a little bit higher, 326.25 over the next couple weeks. Either way, takes you to this zone here. We'll see if that support holds. Moving over to Apple and Microsoft. Apple was down nearly 5% on the week after having this pretty monstrous run. I do suspect pretty much the same as everything else. This is going to continue to fall here. I think we probably get into this kind of 225 to 230 area before we see any kind of major bounces. I'm expecting quite a bit more follow through here. And then looking at Microsoft, kind of the same thesis, right? We talked about this being a high, kind of lower high setup off of this wick. I still think this might kind of chop sideways just because Microsoft had really, really powerful earnings. I don't believe they will be nearly as affected as everyone else. And you can see on the week, it was only down 1.24%. So Microsoft will probably be in good shape, probably one of the safe havens within the Mag 7. Moving over to Tesla and NVIDIA, same kind of story here. Tesla being pretty heavily affected, was down 3.8% to that 414.50 level. I do suspect this will probably fall to at least the next one. 384 is that next zone. So looking for a pretty decent move there of about 6.5% to that next area. Structurally, obviously looked really bullish. Maybe we do find a higher low setup ultimately, but I do think we're going to get a pretty substantial fall, at least for now, to that 9 EMA on the weekly chart. And then looking at NVIDIA, still very strong, still right at the highs, not as affected by everything, down 2.38%, right in the zone. 180 to 183 is this kind of peak zone that I've been watching. Had the breakout, did go higher briefly, and then gave it all back. Momentum probably going to step to bearish here. RSI below the SMA, kind of a breakout. Failed breakout here, lower high setup, breakdown. See how far this falls. 21 EMA is there at 165. If this gets anywhere near this previous top here, the 140 to 149 area, I think that's going to be a good opportunity. But for now, seems like this is going to fall at least about 8.75% to this previous bottom there around the 166, 165 area. Moving over to Meta and Alphabet. Meta was down very small, just 0.74. It rallied almost back to that 736.67 area, and then gave it all back to finish basically unchanged after the gap down Of course, Meta not being nearly as affected, again, similar to Microsoft, very software heavy, not as impacted by the tariff threat when it comes to their primary business. But of course, it had a pretty solid double top, pretty nice confirmation lower. I do suspect it'll continue to go lower, not necessarily because of the tariff threat, just because structurally it looks bearish, and it just was an expensive company in that zone around the 770 area where we topped out. And then looking at Alphabet, 3 weeks of bearish here, 9 EMA, 232 is the next support. It's actually held in there really, really well. Again, not being as impacted as the others, down just 3.64%. Momentum still bearish here. RSI still bearish here. Below the SMA, do suspect that it'll come down quite a bit more. We'll see what happens when it hits that kind of 229 area and on the trend, and I do suspect that will happen. Moving over to Amazon and Broadcom here. Amazon I suspected was going to be quite a bit worse here. It was trying to recover a little bit, but then it ended up closing bearish, of course, down 1.43%. Not too bad, honestly. I'm sure there's a ton of Amazon business, at least on the retail side, that does depend on a huge China market as well as China manufacturing, and those will be impacted. Maybe we're just not seeing it right away, not sure, or it just kind of preempted it with this 5% down here. Of course, we're about 10% off of the highs, just barely less than 10% off of the highs. I do suspect this will continue to go here. 212.25 is the next support. Trend support in here around kind of 206, 207 area. Momentum bearish, RSI bearish, good volume. Do think this is going to have some follow through, especially after this really solid double top. And then looking at Broadcom, down just 4%, just barely off of the highs here, about 13% off of the highs. Kind of surprised that that's 13%. Doesn't really look like it, especially after this massive run here. This was a run of about 165%, massive run, of course, on Broadcom. If it breaks here, 21 EMA is your next support at 292.26. Looking at staples and discretionary, staples was basically unchanged. Consolidation bottom at support 77.50 continues to be your support area. As long as it continues to close above that level, you're in good shape. And I do suspect that we'll probably see a little bit of a rally out of here. And then looking at discretionaries, down 3.83%, structurally broken really across the board here. 21 EMA, 224.88, 227 was your support. 55 EMA is the next one there at 216. Looking at the volume profile, you can see there is still quite a bit of volume in here until we get kind of below 215, and then your next zone is around this 195, 197 area. That's interesting. So might grind slowly lower into this area here, get that lower high setup, and then we fall into that next area, 197. But again, looks like a pretty clear topping pattern. I think we'll probably get some more consolidation, wait for these EMAs to catch up, but ultimately falling lower to that highly traded zone. Moving over to Breadth, as you would suspect, Breadth was terrible on both of these charts, down 53 and 39% respectively on the 20 and 50 days. Momentum continues to resume back to bearish after that one step up that we had last week. Next level 16 here for 20 day. I think we'll go there at least, and then we'll see what happens. Do we get one of those kind of bigger overthrows into this kind of 4.5 to 7 area? Certainly a possibility, just after how extended we were to the upside. Might get one of those deeper cuts here before we get a lither bit of a retracement and then another move lower, which I do suspect that second move is going to happen. And then similar thesis here on 50 day. Probably will fall to this kind of 26 to 32 area in here. Probably get a bounce and then one of those deeper cuts towards that 15 area, same as what we saw back here in December. Get that second fall, and then we'll see how far we make it, and then we'll look for some kind of consolidation or bigger move up after that. Moving over to 200-day Breadth, down 16.26%, down to that 50 range. Below all the EMAs and SMAs, we had this kind of fading price action here, the big sell in April. Rallied up, consolidated. Breadth had not been improving for the last several weeks, again indicating that this was likely a top, but it just took a long time to happen. The top started here August 18th, and we didn't get the breakdown until first week of October here. So see what happens now. I think this probably goes below that 50 line, probably closer to 42. Trend structure in here around this kind of 44 area. I do think we'll go lower, of course. Momentum bearish, RSI bearish. See what happens in here. Do we get all the way to 36? Certainly a possibility, but I do think this will be staggered. I don't think it's going to be in one shot. Similar to this, where you get it pushed down into this area, get a little bit of a reprieve, and then a continuation lower. And then usually that next move is the deeper cut and a relative bottom, at least for now. Moving over to the dollar. Dollar continues to look really, really strong. Nice push up this week, 1.17%. Push to that trend line and then did come into a little bit of resistance. Part of that was because of the move on Friday, but everything still looks good here. Momentum bullish, RSI bullish. I still believe this is going to push out into this kind of 102 area, at least above the 101 into this kind of 102 area, I think is what we're going to get. Ultimately should be pretty good to the bull side. Might be impacted by the China Trump stuff, but either way, if people are moving out of equities, they got to move into something. And usually that means at least base dollar for now. And then also nice breakout above the 21. Finally, nice confirmation close well above those levels. It's right at some of these wicks here, but I think we're going to be in good shape. I think the dollar should go over the next couple weeks. Moving over to JNK and TLT. JNK, of course, had a pretty terrible week, down 1.16%. It was signaling to us that there was some risk in markets. It did start to sell early, and then we did get the big follow through on that. Momentum bearish, RSI bearish, big volume. 95.61 is the next zone of support. 94.82 is the next zone after that. I suspect it'll go. It's about 1.5% to that next zone in here. We'll see what happens after that. I don't really think it'll go too much lower than that. Maybe we get a shift in the politics, but either way, for now, it looks pretty terrible. And then on the risk off play, TLT looking very, very good. Continues to go bullish here, looking for that 92.82 area. I think that's going to be the next zone. It was a nice week, 1.39%. Once this breaks, I think we'll be headed towards that 102 area, this next peak in here, which gives you a nice opportunity, about 10% on the next play on TLT. TLT doesn't usually move very quickly. It can certainly take a while. You can see this took 15 bars or about 4 months or so to make this move of about 15%. So far off of the lows, we're about 7% up. If it takes about the same amount of time to get into that area, that could be about 4 weeks. So it could take a while to get into here. That could be about 4 months or a couple of weeks into that, so we'll see how long it takes, but I do suspect we will get there at some point. Then finishing up with the VIX, you got that big spike on the Friday to that 2165 area, but looking at it on the weekly chart, you can see that same kind of bottom that we've been talking about. Solid low was coming in here. We talked about it. We were at low levels. Momentum was starting to step to bullish, and then you get the big spike out. Probably goes to 28 before this is all done. Kind of a spike in here. The next move is the big question, right? Do we see kind of a spike in here, pull back, consolidation, big spike, or is this kind of a big spike time immediately, kind of consolidation, markets get really choppy, and then we wait a while and then we get a bigger spike up into this kind of 50 area. Obviously, it's really hard to predict that kind of a move, but I do think this will go higher, at least in the short term, hit this 28 area, and then we'll see what happens after that. Moving over to my accounts, I was down about 0.5%. I took off all of those positions pretty quickly on the Friday as things started to crater pretty aggressively and continued to fall through the session. I also put on a call here at 6:20 on the Qs. Do suspect that's going to continue to be in a good position early in the Monday, Tuesday timeframe. Might take it off just depending on how aggressive that initial sell is. If this gets to around a 50% profit, I'll probably take it off. So looking for about 400, 450 out of this before I take it off. It's really long dated, so I think there could be a decent retracement before mid-November time period, so I'm not looking to sit on it forever. And then I have that dollar position. Did okay on the Friday, could have done better, but overall not too bad. The NASDAQ was down about 2.25%, so I was able to avoid most of that. Let me know down in the comments section what you think of small caps. Are they going to be an opportunity? What do you think of the impacts of the China deal or the lack of China deal at this point? Does that throw off the potential for cuts? Are we going to get more cuts? Will that benefit small caps? Let me know your thoughts in the comment section. Otherwise, like and subscribe if you get any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.